Manishi Rai Chaudhary joins us. Manishi, good morning and thank you for joining us. Manishi, today will be a day of twists and turns and peak and toughs. I'm sure your clients are asking you that, Manishi, how should we prepare our portfolios from tomorrow's downside, and how should we really stack up our bets to maximize on the event?
Tomorrow's downside?
Well, it could be downside. It could be downside. You never know.
Yes,
I mean, all I'm saying is that markets are approaching the event with a 5% appreciation on the Nifty. So
Manishi,
maybe volatility could kick in.
Downside tomorrow or upside?
That's exactly the question I had, Nikunj, that, I mean, I don't know whether you have any insider information, but, from the indications that were provided by the exit polls, it does look kind of a favorable outcome for the equity markets, and I think equity markets would be enthused if, if that kind of an outcome actually plays out.
So, Manishi, the good old saying on Wall Street and Dalal Street is that you should always buy the rumors and sell the news. So, assuming that exit poll and markets get their way tomorrow, some would argue that, look, markets have already appreciated before the event and you got to sell the news.
Yeah. I think, if you look at the past couple of occasions experience, then I think there's still a degree of lingering doubt that is associated normally with the exit poll results. Because exit polls on the previous two outcomes were quite significantly off the mark, and that is why I think investors who really intend to play the Indian equity market for the long term may not have committed themselves fully. But if we do get the outcome, then it becomes a settled fact, and therefore then one has to look at what kind of policies the new government can come through with, and as a consequence of that, whether there's any possibility of the investment cycle being kick-started, therefore growth reviving, and if on top of that we also get a possibility of subsidies reducing, which would possibly take care of this crowding out of private investment that we have seen in recent years, then you could potentially see even interest rates declining, not immediately, but possibly 6 to 9 months down the line, and maybe in 2015. So that Goldilocks scenario with reviving growth, possibly even interest rates plateauing out and declining, that could play out next year. And equity markets always tend to pre-act rather than react. So I would think that such expectations would begin to get factored into the equity market right now as we speak. But then, one doesn't know what the election outcome is likely to be, so let's wait for that.
Manishi, what to your mind led to the flare-up in the PSU banking pack yesterday?
Well, I think it's the most obvious reaction to the expected election outcome on the back of the exit polls. Whenever there's a euphoria about potential recovery in the economy based on, again, potential policy decisions, you would obviously have the domestic cyclicals rallying, and particularly those which had been beaten down earlier and therefore are trading at relatively cheap valuations. This was exactly the case with the PSU banks about a couple of months ago, and and I think that has led to this significant rally over the past 1 to 2 months. Now, having said that, I would also caution against too much euphoria in the PSU banks. Some of the recent results have also pointed to the fact that the asset quality concerns are not yet behind us. Slippages from restructured loans, PNB was an example yesterday, are still continuing and continue to be quite significant. These banks would have to raise significant capital, in fact, huge quantum of capital over the next few years to maintain the Tier 1 capital ratios. So it is not really going to be as smooth a sailing for the PSU banks pack as the market up move may have implied. So I think, longer-term investors would still have to be cautious about this particular group of stocks.
Manishi, but let's talk about BOB. You like BOB. BOB this year has appreciated quite smartly. They came out with good set of numbers. So within the PSU banking space, do you think BOB still has some more headroom left?
In terms of fundamentals, it is still relatively better within the PSU banking space for two reasons. Number one, the asset quality concerns are not so severe as some of its peers, and secondly, the quantum of capital raising that BOB would have to do is significantly lower than some of its peers. I think these are the two key variables that investors should look at when trading PSU banks. And I think these are the two variables that are currently working in favor of BOB. Yes, it has moved up significantly. We included it in the portfolio, about 1.5 months ago, sometime in early April. No, I think it was, sometime in March, sometime on 7th of March, if I'm not mistaken. So it has moved up pretty significantly from there, but I think, the valuations are still not egregious, and there still could be some steam left, so we are maintaining that position for now.
Tata Steel, Manishi, and great performance coming in from Tata Steel. The stock is well running up ahead even before the numbers. Did you like the quarterly performance, and what's your call on the stock now?
So I'll tell you specifically, the quarterly performance was good, no doubt, particularly the India business. But the concern on Tata Steel is actually more global, and in this particular case I'll point to the rest of Asia, in particular what's happening in China. Everyone knows that large overcapacities were created in China over the past few years, and they still persist. The government is focused on employment generation and maintenance of employment levels. Therefore, they're unwilling to close down the relatively inefficient capacities there. And finally, one must not forget that the Chinese renminbi has been depreciating. Therefore, it becomes, incentivized. The steel makers in China become incentivized to export. And, one of the obvious destinations becomes India. So I would think that going forward, steel prices could continue to remain under pressure. Therefore, in this entire steel and non-ferrous metals pack, we still have an underweight, and I don't think we're going to revise that stance significantly. From a purely trading perspective, it could still move up on the back of potential election outcome, etc. But I think longer-term investors should use that as a profit booking opportunity.
Manishi, good numbers from Tech Mahindra as well last night. In fact, I would say the best of the pack at a time when the rest of the IT spaces really struggle to even match up to their guidance. You've always liked persistent systems as a theme. What's your view on Tech Mahindra though?
Right. Tech Mahindra is definitely, it lies somewhere between the large cap and mid cap space in the IT services. And we currently like IT unequivocally. We have an overweight on that space, and we think that, this developed market capex recovery theme is actually getting translated into newer orders for IT. It may not be showing up uniformly in the order books of all companies, but that theme is there, and, at some point of time, it would definitely play out on a much more broad-based basis. There are some companies which are actually, exhibiting, they're actually showing such exuberance in their order books. Tech Mahindra is one of them. We do like companies like HCL Tech and Tech Mahindra, which have demonstrated their capabilities of winning new orders. And, if you look at any of the indicators like US PMI or the Philly Fed survey, it would indicate that over the past 15 months, this developed market capex or US capex is, the capex intentions rather, they're trending up. And when one thinks about US capex, it's not obviously the capacity expansion in the companies because they're operating at relatively low capacity utilization. So that would refer to productivity improvement by investing in tech. And I think all across Asia, the Taiwanese chip makers, the Korean DRAM manufacturers, the Indian IT service providers are likely to be the beneficiaries of that.
The MSCI weighted change on HDFC Bank is very harsh. I know MSCI is right in their thinking because they follow methodology. But are you a bit surprised that despite that MSCI reject, HDFC Bank is not cracking?
I think, the typical long-only investors, they're looking more at the fundamentals in case of HDFC Bank, which has always been one of the safest and safe and sound exposures in that space with extremely low and very well maintained asset quality. I think, this was sort of well known the quantum of weightage decline might not have been known exactly, but given the fact that the foreign limit had not gone up in HDFC Bank, obviously led to an expectation that the weightage would decline. So I think some action on the part of the benchmarked investors would have already been taken over the past few months or few days. So that's why, yes, I think the fact that it hasn't reacted at all is a bit of a small surprise. But at the same time, when one considers the longer-term fundamentals of this stock and the fact that the real long-term investors in India are sticking to quality for the time being, it does not really come as so much of a surprise.
Right. Manishi, the last time we were chatting, you talked about your Nifty year-end target, that of 6,800 to 6,900 thereabouts, assuming that it's not an extraordinary, election result that we may see. In the case that the market is already at 7,100, would you revise that target at all? Going up, or rather assuming that the exit polls are right and it is an NDA victory?
Right. We actually upgraded the India target. We don't have a formal Nifty target, but we do have a Sensex target, which was 24,000 by the end of calendar 2014. So about 6 or 7 months from now, 24,000, which, as you rightly point out, the market's almost there. I think Sensex is close to 23,800 or so. Now, having said this, if the kind of results that the exit polls seem to have forecast, if that kind of result really comes through, then it would mean the risk premium that investors attach to India, that possibly declining, because expectation of policy reforms and more importantly policy implementation in the industrial space, metals and mining space, and several other areas would increase significantly. So growth expectations would increase. You would possibly see a concurrent impact on the currency, some kind of a downward pressure, and you would also see a decline in risk premium. When one puts all these things together, one could argue that India would deserve a re-rating. Currently it's trading at somewhere close to 14.8 to 15 times 1-year forward P, which is almost at the level of the long-term average. But in times of euphoria about growth improvement or about political outcomes, we have seen markets going to closer to 1 standard deviation higher than the long-term average, which might imply another 10 to 15% upside from here. So those are the numbers that we'll have to check, we'll have to figure out. But we are all waiting for the election outcome and the extent of majority of a strong and stable government that finally the outcome would imply.